And we have the knowledge because we have the chart. Pro 2 color-coded chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Want the truth when investing in the stock market? Here's how.
Hi, I'm Phil Grande at philsgang.com. Listen to my radio show every day because that's where you're going to get the truth. You're not going to get the truth listening to these dopes on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. What is coming to me?
The chart. Good afternoon, and welcome to Phil's Gang podcast. Well, I just did a couple interviews, and everyone asked the same question. Do you think this market can keep rallying like this? And I said, no. I said, no market continues to keep rallying like this, or rally. I said, go back to the tulip, the biggest crash we ever had in the 1600s. Remember the tulip stock market? Everybody went nuts. And you can equate the tulip to what's going on today. And then you go back and take a look at 1929. You go back and take a look at 1987. Then go back and take a look at the dot-com crash. Then right after that, the 2000 housing financial crash. All markets crash. Because remember, markets are all based on the same thing. Bunch of BS, okay? The pure markets were before all this technology. The pure markets, when you used to really look at profits and margins. And like I said yesterday, margins, profits, boy, that was the mother's milk, and earnings. So you had earnings and profits, but the big part of that is margins. You got to meet your margins. Anyone who owns a business, small business, am I correct? You have to focus on your margin. If you sell a hat for $10 and you buy it for $5, that's your margin. All of a sudden you start squeezing that margin. You start cutting your sell price from $10 down to $9, squeezing your margin, you're going to go out of business. I used to fix a lot of companies that used to, the companies that were, real trouble. And I'd take them over and turn them around, and either I'd do it for banks or I'd keep the thing and buy it myself. But they all had the same problem. It's always the debt. And it's always that companies wait too long, okay? And until they fix what's going on. And public companies are the worst because CEOs, they don't really care at the end of the day. Most CEOs, all they care about is keeping that stock price going up so they get rich because they have all the options and their income is tied to stock price. And so But the point is, I'm getting off the point here. The point is that can this market keep rallying? And the answer is, of course it can, until it doesn't. I said the same thing back in the dot-com days. I said, sure it can, until it doesn't. And we were pretty close to calling that crash, 2008. Remember, we called it almost right to the day. 2018 we did. In 2018 we had a small crash there, but we called that one almost right to the day too. But here's what's going on. If you look at what happened in 1929, you look at what happened in 1998, you look at what happened in 2008, what takes these markets down at the end of the day? Well, first, what holds them up? A blend of continued announcements to pump everybody up, right? And ever since they started at CNBC, that program, right? That they just keep pumping and pumping every morning. Everything's wonderful, everything's great. That's one thing. And then you got increase in your money supply, because that increase in money supply is so important because it keeps on funding the CEOs to do stock buybacks. And then it's the anticipation of more rate cuts. We hear that all the time. There's going to be more rate cuts. Every time they say there's going to be more rate cuts, the market goes up. But every day now, just like back in the dot-com days, we always had an announcement every day to keep the market going up in the dot-com days. We're seeing the same thing right now. Every day we're getting an announcement, another another increase in investment, okay, in AI infrastructure. The last one we had, as you remember, was Oracle, right? And they did a deal with OpenAI, and then the market took off, right? So that's their trick right now. If they can keep every day or every couple of days or at least once a week, when the market starts pulling back, do another announcement. And Trump's good at this. Do you remember in his first term, he did that? It was always about, he was going to do this tax cut, remember? Tax cut. And every time the market pulled back, said, oh, we're ready to do the tax cut. Ready to do it. And he kept dragging it on, and the market kept going up and up and up and up and up. But what kills you is when you do that and you keep driving your market higher, you drive your dot-com higher, you drive your housing financial crash, you keep with that concoction of, everything's great and let's keep pushing money in here. Let's keep pushing money to the CEOs. They do more stock buybacks. Here's where the problem ends up. Leverage. Leverage takes every one of these stock markets down. Leverage. What leverage am I talking about? I'm talking about the leverage where Wall Street has learned how to screw, the poor retail investor. The worst thing they ever did was margin accounts. Now, in 1929, you only had to put down 10% of the stock's value. Now it's 50%. But again, if you add back in all these different programs they're doing, we're in worse shape now than back in 1929. When you talk about the derivatives and all these other programs they do, we're in worse shape now than back in 1929. So the problem becomes, as soon as the CEO stops getting more money, cheap money, from the banks, when that stops, he's not going to do stock buybacks. He's going to stop doing the stock buybacks. But here's what they do. Wall Street's smart. They use the retail investor to keep propping the market up. They know the retail investor doesn't really know how the market works. All they know is if they can keep the retail investor pumped up every day, giving him something to hang on every day, especially rate cuts. Oh, we're going to, anticipation of rate cuts, that's a big one, anticipation of rate cuts. And of course now, every day, an announcement of an investment in AI infrastructure. They know that they can account, and as long as they keep piling in money into margin accounts, they try to get the retail investor far in debt. The more in debt he gets, the more they can extend a stock market rally. That's the key. When people say, can this market continue? And after it's been going up for quite some time, the way they continue it is they keep increasing the amount of money available for margin accounts. So you can hold up a market a long time as long as it's leveraged, and the leverage comes from the market account. Even when, and the other leverage, remember, is the leverage that the companies, because they get all this money, okay, from the increased money supply to keep buying their own stocks back. But what people don't realize, at the end of the day, the guy that end up holding the bag, or who keeps the market going up when you say, hey, can this market keep going up? As long as the margin accounts keep increasing, we're at $1 trillion. We're at $1 trillion right now. If they can push that up to $1.5 trillion, $2 trillion, and they may do that to hold the stock market up. So it's the CEO who does the stock buyback, right? That pushes up his stock artificially. It's a big bull-faced lie because he doesn't have any increased earnings or profits, okay? He just reduces the number of shares outstanding. And when you have less shares outstanding, as I told you yesterday, your stock price goes up without doing anything. And the more you reduce the amount of shares outstanding, the higher your stock price goes up. That excites the retail investor who doesn't know what he's doing. Okay, doesn't understand how the market works. So all he sees is the price going up. He doesn't understand the price is going up on a falsehood. The price is going up on something that was totally illegal before Reagan. I mean, that's a terrible thing. You keep pushing up the stock price, and it's really illegal. I mean, no more, but it used to be. So what you're doing is the bad thing about the stock buybacks is you're creating this thing that you're what's the word I'm trying to, you're trying to suck in folks, okay, to buy your stock. And so they get excited with the stock going up. So the stock goes up from $20 to $30, $30 to $40. So the retail investor, okay, and the people that take care of your 401k and so forth, right, and pension fund, they don't care about you. So they see it go from 20 to 30, 30 to 40. All they think is, wow, things are good. We're going from 20 to 30 to 40. But what they don't realize is that no, that's not going. It's not going up for the the best reasons. Okay, and what are the best reasons? Okay, that you have, again, you have earnings and you have profits. So Wall Street connived with this margin. They did this in 1929. Same thing. People saw stocks going up like crazy, right? And then they said, okay, let's suck in the retail investor. Let's use him to prop up the market to hold it up. So we'll give him more margin money. And you only had to put 10% down on a stock back then. 10%, that's it. So that's what they're doing again. So if all these people who were going into debt on margin accounts understood how it worked, that when their stock is going up from 20 to 30 to 40 to 50, you're heading into a crash. There's no way to avoid it because there's nothing behind that increase.
3 minutes.
There's nothing behind it. You don't have. You're not generating more income to make your stock go up. And if you're not generating more income, you can't be generating more profits. But all they see, it's going up. And then all of a sudden, greed hits. Greed starts hitting. And people get greedy. I got to get more of that stock. Look, it's going up again. I got to get more of the stock. Instead of saying, wait a minute, how the hell is the stock going up? Oh, I see. They're printing money. The Fed's printing, Treasury printing money, give it to the Fed. The Fed takes the money, gives it to the CEOs. Now the Fed takes the money, gives it to the banks. The banks give the money to CEOs. CEOs buy their own shares. And like I said yesterday, there's less outstanding shares. You ask, I'll bet you if you line up 10 people with a margin account, 50 people with a margin account, they don't know how that works. They think the stock market, the stock that they're in is going up because it's doing something wonderful. Now, when you take a market that only has 5, 6 AI affiliated stocks, especially in the semi world, think about it. This whole market's being held up by semiconductors. The semiconductors, AI is tied to semiconductors. And there are billions and billions and billions of dollars they keep putting into these investments, okay? And everybody thinks it's just going to keep going up. But we're seeing around us messages from the market. We're seeing a weak labor market. We've never seen, the layoffs that are coming right now. We haven't seen layoffs like this in manufacturing. The layoffs is just absolutely horrible. People don't understand any of this. So we're getting more layoffs in manufacturing than we ever had before. We're getting, look at oh my God, we had the manufacturing got hit hard. There was one more group that got hit hard last week. Manufacturing, there was one more group. I can't remember it right now, but I'll find it. So, but the person who's willing to go on the hook with a margin account, he's not aware of any of this. He's not aware of any of this.
30 seconds.
And so he just thinks my stock is going up. I turn the TV, they tell me to keep buy, and it must be doing well because it keeps going up. It wouldn't go up if it's not doing well. And here, the stock market, they think is doing well. It's the most overvalued in history, the worst concentration, few stocks, all money's chasing a few stocks, the worst breadth in history, the worst increase in money supply in history, the worst stock buybacks in history.
10,
But they don't understand that.
8,
They're just going to keep buying.
6,
As long as they see, then eventually the crash comes.
2, 1.
I'll talk more about that when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
All right, welcome back. Yes, I finally found what it was. Okay, so while everybody's all excited about the stock market going up and think it'll never come down again, here's what's going on. What will take a stock market down? What always takes a stock market down besides weak labor? That's one of the biggest things. Weak labor always starts there, okay? And especially when you have big, strong job declines, like in manufacturing, that will take a market down. People get scared. Remember, when you drive out of your garage, you pull your car out of your garage and you're starting to go to work, and you notice your neighbor next door, he hasn't pulled out of his garage yet. He hasn't gone to work yet. Then you come home, you see him cutting the lights. Hey, didn't you go to work today? No, I got laid off. Nothing undercuts the confidence in the stock market than when a neighbor sees another neighbor lost their job. Panic sets in. Now when the wife goes shopping, he'll say, the groceries, can we cut back about 15, 20%, may lose my job. That is one of the biggest things that starts undermining these big stock market rallies. Energy jobs. We lost, this is brand new. This just came out, I think it was Thursday or Friday last week. Overall job losses, we hit a near record of 32,000. Energy jobs since January, a historic 30% reduction. Manufacturing, 67%. Year to date, 67% losses manufacturing. And manufacturing jobs is now in a 7th consecutive month of slashing. Hours are being cut. Everyone's going from, not everyone, but a lot of people are going from full-time to part-time to no time. Week ending, September 6th, big increase in unemployment checks. A record unemployment checks for that period of time. So you see what I'm saying? So again, but when a person sees a stock going up and they get the same hype, especially now, when they're intoxicated, okay, with this, as I said, we have this blend of these continued announcements, another AI investment. And Trump brings the guy in the office, the Oval Office, and he's just going to put $100 million into AI. And we have a lot of people now are saying, and reports are saying, that people who invested in AI are very disappointed. They're not getting the returns they thought they were going to get. Also, the increase in, when they keep pumping, say, look at the increases we're getting in these investments, all this AI money. Everybody's putting money in AI. Stock keeps going up. More rate cuts. They always keep that rate cut out there. They always hang that out in front of you. Oh, we're going to have more rate cuts. And then leverage. This is the big one. Leverage. Money that's in the margin accounts. Wall Street smart enough to know you keep piling in that money in the margin accounts, the retail investor doesn't know the details. They're not professionals. They don't understand what's going on with the bond market. They don't even understand how the bond market works. They don't understand, okay, that just because the stock market's going up, it doesn't mean it's not going to crash. I mean, unless they remember the dot-com days and the financial days in 1987, 1929. But right now, if you look at the crash of 29, the crash between 1998 and 2000, and then the financial crash, what unwound was the leverage. That as soon as the CEOs stopped buying their own stocks back and the stock price dropped, all of a sudden, everybody who has these margin accounts, those stocks start dropping. All of a sudden, they get a phone call and they get a margin call. That's what set off the 1929 crash, set off the dot-com crash, set up the housing crash. It always is the same thing. It's the margin accounts. And boy, they hide that. They'll lie about it. They don't want you to know that. Because because remember, they keep that plumb full of money so they can suck in the retail investor and get them to hold the stock market up as long as they can. Look at I got a chart here with U.S. margin debt. Look at this. This is insane. We've never had margin debt like this. And they're going to increase it again and again, because as long as they can keep the retail investor going deeper in debt. And do you think Wall Street cares? Wall Street doesn't care if there's another crash, because they know how to short stocks. Wall Street doesn't care if there's going to be a crash. What do they care? Well, they care. So we have some serious business here, and if people really got to start looking and do some research, and go back to the 1929 crash, go back to the dot-com, go back to the housing con, go back to 1987. It's always the margin accounts, the margin calls that starts the biggest crashes, because once people panic and start saying, no, just dump my stock, I'm not going to write a check. And then it's 1, then 2, then off it's 1,000, then 5,000, then oh man, then the market just, and that's why I was doing this interview and I said, I said, it's so hard to convince people to learn how to sell short. I said, look, everybody's making money in these dot-coms, these AI stocks rather. Everybody's making money in the semiconductors. Hell, we've been in SMH for a long time. Okay, matter of fact, when SMH first started to rally, I told everybody, let's just buy the ETF. Then you got them all, because you knew that it was the semiconductors that are going to get all the action with all this AI stuff. So now the point is that we got to sit back, keep staying along with your positions, your tech, keep staying along with the gold. And gold always tells you something seriously wrong inside your stock market, always tells you when it goes up like this. But we're not going to get out of it. Why would we? Not until we see a crack in the margin accounts, or we see a crack that will first show up and the corporations that they stock with all this borrowing money for stock buybacks. The biggest problem the corporations have right now is their debt. They have historic debt. Historic debt's killing them. Why? Because all the debt is coming from borrowing money to do stock buybacks. So that's a real problem. As far as the market, let me just go over some things with you for the weekend. And again, you can see, I hope you can see my chart here. I did a chart just to explain to everybody. If you didn't see it yesterday, I'll just take a couple of minutes. This represents a stock, 100,000 shares. Over here represents the stock of the price of the stock. So let's call this stock X. So what happens is when the CEO buys the stock back, his company buys it back, it doesn't go out to the public, can't be traded anymore. So the amount of shares that the public can trade, buy and sell, has dropped from 100,000 to 90,000. That pushes your stock from $20 up to $40. But it didn't go up because of income generated. It didn't go up because margins were better. It didn't go up because profits after expenses were better. No, you don't need any of that. That's why people love these stocks, because you don't need profits, you don't need earnings. All you need to do is keep doing those stock buybacks. Now the problem becomes is when the stock goes from 20 to 40 to 80, the retail investor goes nuts, and Wall Street knows that, and they know they don't understand even what a stock buyback is, and they'll increase the money supply so they have a lot more their margin accounts are more generous, and so that's how they screw the small retail investor, by getting him further and further in debt. And why do they do that? So J.P. Morgan, Goldman Sachs, Citi, all the institutions, okay, whose their job to make rich and wealthy, okay, the police union, the nurses union, the teachers union, they got to take care of them. And remember how it works. J.P. Morgan, Goldman Sachs, Citi, they all fight for the same police union, for the same fire union, for the same nurses union. Every year they fight with each other trying to get that business because that's the biggest part of their business. So again, all these corporations, okay, the minute the CEOs stop buying these stock buybacks, the price drops, and then that's when the margin call starts coming in, and then people say, well, sell my stock, I'm not going to send a check, and then the whole thing collapses. So that's going to happen again. It does every time. But this market could keep going up for, I told my members, I don't think we're going to see a correction in this market until the first quarter, if that. Because as long as they can keep, and Trump did this, I said this yesterday, Trump did this, if you go back to his first term, and remember he kept putting out there every day, okay, we're ready to cut rates, we're ready to do a tax cut, ready to do a tax cut, and the market every day go up, go up, go up. He did this for about 11 months, I think it was. We're going to do a rate cut. And he never did it. He just finally did, but he used that to pump the market up. Now they're using every day. You notice how we got that Oracle announcement. Look at what happened yesterday. We got another company yesterday increase its investment into AI infrastructure. And I forgot the name of the company that did it yesterday.
OpenAI.
Yeah, OpenAI. Yeah, OpenAI. But it was another. So my point is, all these companies will just continue, okay, to make these announcements and keep the stock market going up and up and up until, again, the CEOs stop buying their own shares back, and then that's when everything just drops. So the stock buybacks has been really helping everybody. Now, if you go take a look at the stocks, if you take a look at the value stocks have been going up. Value stocks are going up. And when you look at value stocks, those are like your Pepsi, your Coke, your box stores like Home Depot, Lowe's, Cisco. Those all been going up because people are also looking for those stocks as defensive plays, okay? So they've been going up. But if you go through and you really look at the indices, if you look at the spiders, and we've been in the spiders a long time. I always tell my members, stay in the spiders, don't get out. Stay in, because I said, two things I said at the beginning of the year. I said, stay in your spiders and keep staying in gold. Gold's going to keep going up. Spiders going to keep going up. And I knew spiders were going to keep going up because we knew all this AI stuff was going on. Now, IWM has been going up too, the small mid-cap stocks. They're taking money now from AI. A lot of the smart investors are cashing out their money in AI, and they've been buying the small mid-cap stocks. And that started back in May.
3 minutes.
In May. And I remember when we got in that, we had a buy signal. I think it was a flag pattern, okay? And I think, I don't remember the date here, but we got into IWM. The bank stocks, okay, those stocks right now are having a little trouble, okay? But when you go down the line, you see that the money is going into the same stocks, okay? Going into your MAGs, going into ARC, okay? Going into the semis. The semis are the big ones, okay? That's where all the AI action is. And then, but there's not a lot of money going into, like, for example, XLY, okay? That's our consumer discretionary. That's starting to roll over. So again, it seems like everything is just staying with these semiconductors.
1 minute.
Now, the other thing is that you got to start watching your leisure stocks, okay? Like your casinos and because, like, for example, we're watching now the short McDonald's, okay? I think we have a scout on McDonald's. We're short McDonald's. XLY, if you look at that, that's your discretionary, and that's your Home Depot, your Costco's, your Lowe's, your McDonald's, your Starbucks. That group has been a good group to start shorting. Your leisure stocks, like ALK, we made a ton of money on ALK. We shorted ALK. That's Alaskan Airways. We did really well with that. And now we're looking again to start. We're looking for some good shorts in that same leisure group. I think one that's going to be good is going to be CCL. CCL, and I think RCL. I think the cruise lines are going to make some great shorts, okay? So, again, just join our gang. If you don't know how to sell short, we'll teach you how to sell short, and we'll also identify before these markets correct. We'll get the messages from the market, and as all pros do. No professional is ever surprised with a market correction or crash. They're so obvious. Okay, that's it. I'll see you on the charts. Have a great weekend.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.